on behalf of the team at America Saves, it's my honor and pleasure to welcome you to the first Workplace Savings Roundtable. We know that each of you have many competing priorities, so your willingness to be here and contribute to this conversation doesn't go unnoticed. And in fact, it highlights your dedication and commitment to building a more financially stable society. And for that, we thank you. So before I even introduce myself and our team that's here, I'd like for you to just take a moment and look at the people, at the leaders that are here in this virtual room today. From my perspective, it is truly an honor and very humbling to sit and converse with such a diverse group of leaders who are committed to the success of their organization and striving for a better, more financially confident America. So again, thank you so much for being here. Now, I am Kia McAllister-Young, Director at America Saves, and as you know, every day we wake up ready to get closer to our mission, which is to empower all Americans, particularly those that are most vulnerable, to save successfully, reduce debt, and get on a path toward building wealth. And at the core of that mission is realizing our vision, which is an America where each individual is saving successfully, automatically, and has a savings account with at least $500 on hand for emergencies. And we work toward that mission and vision from several different angles, one of them being supporting and being a resource to employers as they encourage and motivate their employees toward financial stability. And that is what brings us here today for what stands to be an enlightening conversation, lots of takeaways, calls to action, and next steps. In addition to myself, there are two other America Saves team members who are here to support this effort that I'd like you to meet. I'll start by introducing you to Carolyn Pemberton, the America Saves Senior Program Manager, and truly our workplace savings expert. Carolyn has done tremendous work and research regarding workplace savings by leading our Split to Save program since 2018 and helping realize America Saves' first statewide automatic savings initiative in Wisconsin over the past year. So Carolyn, I'll hand it over to you to say a few words and introduce Amanda.
Thank you, Kia. And I echo Kia's comments about how much we appreciate all of you taking the time to join us for this roundtable event this afternoon. Having worked with some of you personally and others having heard of your work, I know how much expertise, knowledge, and passion there is in this virtual room today. And workplace savings is not a new topic. From 1981, when employees first were allowed to contribute to 401k plans, to today, when many individuals are still dealing with the financial impacts of the pandemic and many are struggling to fund an emergency savings account, we've been talking about how to help employees save at their jobs. So today, we really look forward to hearing from all of you as we work together on this shared goal of equipping workers with the right tools and resources to save for today and for tomorrow. Now, let me introduce my colleague, Amanda Woods, Strategic Partnership Coordinator at America Saves, who's going to review some quick housekeeping details.
We're excited to have all of you here for the America Saves Workplace Savings Roundtable. Before we get started, there are a couple of housekeeping tips that we'd like to share with you ahead of time so we can have the most engaging and productive conversation. First, if you have the ability, we'd love to see your faces. Turning on your camera allows for a higher level of connection. And as we're all mission aligned, it would be great to be able to put faces to names. A little bit about speaker view and gallery view. You have two options of how you can experience this conversation. At the top right, you can choose gallery view, which allows you to see many participants at once, with whomever is speaking highlighted by a yellow box. The other option is speaker view, which allows you to hone in on one speaker and see a few of the other participants at the top row, which you'll be able to scroll through as well. We're looking forward to the amazing contributions and insight that each of you will bring to this roundtable, and ask that you utilize the raise hand feature in Zoom when you'd like to speak or respond. This will allow us to create space for everyone to share and discuss while avoiding multiple participants speaking at the same time. Our moderator, Carolyn, will also guide the discussion throughout, and we'll have team members present who will focus on monitoring the chat and the raised hands to really try to ensure that everyone who wants to speak will get the opportunity to do so. We'll do our best to get to all the questions, but depending on the time, we may not be able to. So keep in mind that this is only the first of these opportunities, and we'll look forward to hearing from all of you again at future dates if we can't get to everyone today. We want to encourage each of you to share and respond, even if it differs from other people's contributions. There's room for everyone to contribute, and we value the insight and expertise that each of you brings with you to this discussion.
Great, thanks, Amanda. So as Amanda just stated, our goal is to have a robust exchange of ideas, opinions, and experiences regarding workplace savings. And this encompasses emergency savings, retirement plan participation, debt reduction, employee recruitment, retention, and productivity, as well as emotional well-being. And while we're all familiar with statistics around the lack of emergency savings and debt that individuals carry and financial planning services and the amount of financial confidence that individuals feel, we'd like to just share a few statistics to help set the stage. So last fall, America Saves surveyed our savers, and a few highlights that we want to share from that. It revealed that debt repayment, emergency funds, and retirement were listed as the top savings goals in that order. Nearly 60% of the individuals indicated that they save automatically. And the top 3 challenges to savings were buying unneeded things, unexpected expenses, and not making enough money. About 10% felt very good, and 35% felt somewhat good about their overall financial situation. The 2020 Enrich Wellable Employee Financial Wellness Report showed that 2 of the 5 most popular financial wellness benefits are actually about getting more time and less about free money in the pocket. Flexible work arrangements and paid family time off, while not traditionally considered financial wellness perks, indirectly help employees by allowing them to save money elsewhere, such as in daycare. And then the 2020 Ebrey-Greenwald Workplace Wellness Survey reported that 70% of employees say they need their employer's help to ensure they are financially secure, and 63% said that it is their employer's responsibility to help make sure that they are financially secure. And so at America Saves, some of these sentiments do align with what we're hearing from our savers. They tell us that they view their employers as trusted sources of information, and they believe that the financial resources shared by their employers are reliable, trustworthy, and credible. Employers have the clout to deliver information to their employees that will gain their attention and will help make a difference in their financial lives. So today, we want to hear what you've seen in your own organizations with your clients, learn through your research, focus groups, and surveys. Let's talk about the ideal and the reality of what employers can and will do in terms of implementation of financial well-being benefits for their employees. And while discussions like this are really helpful, we want to go even further and help move the needle to what benefits and services employers are offering and what benefits and services employees will participate in. So after we've had our discussion, we're going to explore how we can begin to work together to move the needle. How do we combine research, knowledge, and practical applications to incentivize more employers to offer appropriate financial well-being benefits to their workforce that employees will actually use? So around this room, we have a lot of different perspectives. At America Saves, we bring direct insights from savers. Some of you have direct insights as an employer and from employers. Some of you have insights from employees, and some have research, focus groups, and survey results. So let's bring all these different perspectives together and have a constructive dialogue about creating financially healthy employees. So let's dive into the questions. So our first question is, what is workplace savings and how does it show up in your organization? So let's explore what workplace savings is overall and what does it mean in your organization and how has it been addressed? And Kia, I think you wanted to add a couple of comments.
Yeah, I always know that it's no one ever wants to be the first person to contribute to to a roundtable discussion. So I will be sharing America Saves perspective and what we've experienced. And as you have information, things that you want to share, we invite you. Now is a perfect time to raise your hands while I'm sharing the America Saves perspective. So new staff at America Saves are, and actually CFA as a whole, are encouraged to use split deposit and are automatically enrolled into our 401k plan with a 3% contribution. So during our orientation process, we actually encourage any new team member to split their deposit and enroll and use automatic savings during our orientation process for new team members. Since 2018, we have offered Split to Save as a free online tool that helps employers encourage split deposit among their employees during that orientation process. So we have actually implemented, obviously, our own program into CFA. And this is still a program that exists. So if you're interested, Split to Save is still available. I know that there are several of you here that have Split to Save as part of your orientation process, and use it beyond just the orientation process to continue to encourage automatic savings. So with that, being able to share what we do at CFA and America Saves, we're excited to hear from you about what you feel workplace savings is and how it shows up in your organization.
Great. Thanks, Kia. So Matt, I see you have your hand raised. Matt Cameron with Notarize.
Hi, thank you. Thanks for hosting today's roundtable and the opportunity to participate. I think workplace savings can really take different forms to accommodate different types of organizations, but I do think it's extremely important because, like you said, employers have that captive audience, and it's really mutually beneficial for employers, but also employees to ensure their financial well-being. I was just referencing another study that shows that employees who have higher levels of financial well-being are more likely to be able to focus at work versus the financial stresses at home. And that was a compelling argument internally when I was talking about the program at Notarize. And I think for how it's implemented, how a workplace savings program is implemented for us is, thank you to all of you. We worked hand in hand with America Saves. We developed our own workplace savings program to keep employees engaged throughout the year. We started with focusing first on emergency savings. We designed some how-to guides and also promoted the Split to Save feature that was actually already in our payroll provider. They had that, it's just no one was actually promoting that it was a possibility to use. And then we also created an internal Slack channel to share information. We promoted the program at our company All Hands. We used our voice on social media to amplify the America Saves campaign. And we've also been working since then to partner internally with our employee resource groups. For one example is our parents ERG. And now we're working with them to do webinars and series for our employees about talking about money with your kids and also the benefits of financial tools like 529 programs.
Great. Thanks, Matt. And I see David John, you've raised your hand. David with AARP.
I have actually. We have a variety of things, and we also have some goals that we are shooting for. AARP has allowed people to split their deposits among up to four different sources for a number of years. We also have an automatic enrollment 401k program, which I believe starts at 5% and has automatic escalation from there. We believe both of those are essential starts. We also have a separate emergency savings program, which at this point an individual has to enroll for. We do not have automatic enrollment in that as yet. That starts at a default of 2% of earnings and goes on to a no-fee payroll card, which we've found to be a fairly decent vehicle for that. But in our goals, what we are seeking actually, both here and working with various people across the world, is an automatic enrollment emergency savings program. We believe that a separate emergency savings from general savings actually means that the money is less likely to be used for other purposes. And we have found that realistically speaking, while we will get something like 70% in a national survey of people who say they're interested in an emergency savings program, when it actually requires a separate enrollment, the amount of enrollment is maybe a tenth of that, or in some cases, for instance, the UK's Nest, it's even less than that.
Great. Thanks, David, for sharing all of that with us. And I see Wendy Kennedy with Kroger.
Yes, thank you, Carolyn. So for Kroger, we do have a wide variety of associates, from our CEO to our hourly population out in our stores. So we do offer a couple of different benefits to our associates. One is the America Saves Split to Save program. We work closely with Carolyn on the America Saves Week, really to promote this to our associates. We do present this information to our ARGs as well through webinars and on-site meetings. We are working with our talent and development team to kind of incorporate this Split to Save program into our new hire orientation program. And we do also offer financial counseling through ACO Financial Services. So this is available to all of associates, and it varies depending on your level, but they do have access to that resources with ACO.
Great, thanks, Wendy. And then I see John Scott with Pew Charitable Trusts.
Yeah, thanks, Carolyn. I think for a while there, your name was showing up in my name, but we got that changed. And thanks for holding this roundtable, and I'm honored to be a part of it. We do a lot of research at the Pew Charitable Trust, where I work. We've been doing a lot of research on retirement savings, but just talking about Pew's retirement plan, which I'm not used to talking about our own retirement plan. But we have a very generous matching contribution and discretionary contribution. It's dollar for dollar match up to 6% of pay, and additional discretionary contribution on top of that. So, that using that workplace savings, the payroll deposit method, we also combine that with automatic enrollment. So we get a very high participation rate into the mid-90s. But I think the one thing that I'd want to highlight, that I think a couple others have already mentioned, is if you attend the orientation for the 401k plan at Pew, you get a free half-hour consultation with an investment advisor. We have an investment manager for or investment advisor for our 401k plan. They will send one of their advisors to meet with you one-on-one just to discuss anything about your financial situation, and they make them available, I believe, on a quarterly basis. And that to me it points out the larger point, whether that could work in other plans or not. But when you ask what is workplace savings, and I think David, John, and others have mentioned this, it's not just a vehicle for saving, for retirement, for emergency savings, but it could also be a platform for getting information, for helping with budgeting, for helping with a whole host of issues that families are often facing. So I sort of view it as a very broad definition of workplace savings. Thanks.
Terrific. Thanks, John, for sharing all of that. And I see Matt Ball, you've raised your hand as well.
Matt Ball with the Financial Health Network. It's so great to see so many friends, colleagues, and thought leaders in this space. Just to add maybe some additional framing to think about sort of workplace savings is, what are the goal of the savings programs that are implemented? And so we've had a lot of conversation about the retirement plans, and obviously those are designed and intended to be leveraged for long-term savings opportunities. You've then had some innovations, and I think it's fair to say that after-tax savings and retirement plans have been around for a long time. They're just sort of going through a rebranding exercise in the current moment to focus on the sidecar savings. But we're also seeing that short-term savings, and this gets to some of what my friend David John was saying, is short-term savings in theory are intended to be sort of liquidity solutions. How do you help people deal with the inevitable financial shock? And I think we have just seen over the last 10, 15 years that financial shocks are as certain as death and taxes. And so understanding that those liquidity-based solutions in the short term are really important stabilizers in people's financial lives. I also think that we can learn, again, this speaks to David John, although this is not a commercial for David John. He's someone I pay a lot of attention to and listen to. But the ability to gain access to those through some sort of behavioral automation. Certainly, we've seen that in the retirement space. There's opportunities for that emerging through some legislation, which I think are worth considering. But we've also learned, and I shared in the chat, some ways in which organizations can structure choice architecture in the enrollment periods for workers in order to make those more accessible and easier to gain access to. At the same time, I think we've learned a lot from a corollary to savings around HSAs, which of course are only available in high deductible health plans. But what we've continually seen is where employers are willing to put their own dollars into those funds to seed them, we tend to see higher participation rates. I think that matters both in the retirement savings context, but also in the short-term savings context, where employers seeding funding there sends both the implicit and explicit message that this is a benefit worth investing in. It's also, frankly, particularly for the most vulnerable, the ability for them to save $400 could take years. And so being able to see employers provide that initial seed funding is another way in which to really scale the impact of short-term savings programs.
Great. Thank you very much, Matt, for sharing all of that. And then I see Sid Padilla, you've had your hand raised.
Yes, thanks, Carolyn, and great to see some amazing people here. So really loving this conversation. To add to everything that was already said, especially Matt, as you're talking about making sure it's something that we can ideally automatically enroll into, having liquidity. I agree. I think having the ability for employees to be able to save towards multiple different goals, emergencies being one of them, but most importantly for them to be able to access those funds when they need it, our payroll card or some other fast means. I think that's incredibly helpful. The other piece I wanted to add here is that we shouldn't just take the banking aspect of things here for granted, because unfortunately, too many of us are financially underserved. Things like credit checks and fees very much get in the way for people opening bank accounts as well. And so when we are focused on solutioning, we are trying to, very much similar to the retirement space, package all of those different banking elements, behavioral elements together into a single program that an employer can launch and we can effectively manage on their behalf. I think that the other piece, just to add to the rewards element, it's the rewards can be used not just on the front end to incentivize people to save in the first place, but if we can revisit over the course of the last 2 decades, the fact that the interest rate has been so low, there really hasn't been an economic incentive for people to put money away into a liquid fund. So if we can restore that in alternative ways through employers providing rewards or milestone rewards or what have you, that can be incredibly helpful for employees to sustain their savings behavior as well.
Great, thank you, Sid. And then Josh Deach from T. Rowe Price, I see you have your hand raised.
Thanks, Carolyn. I'll touch on something that others have touched on, but I'll give a slightly different spin. One of the things that we've seen in our research most recently revolves around wellness and people's capacity to save. And one of the things that we see as the real barrier to savings, quite frankly, is debt. And we see that those who suffer from financial stress relating to debt, and in particular, debt relating to credit cards, student loans, medical debt, payday loans, things that aren't sort of considered necessarily good debt, really struggle. And we saw the savings rate differentials between those that had moderate to high levels of stress versus those with lower levels of stress. It was 2 full percentage points. And so when we think about, helping people to save, it's really, there's a lot of steps that have to happen first before they can get there. And I think oftentimes, particularly with auto enrollment and other types of defaults, we sort of forget that people struggle with debt and its effects on their ability or capacity to save. Thank you.
So Josh, Matt is asking if there was the type of debt, did the type of debt matter, secured versus unsecured?
Yeah, generally secured debt wasn't as detrimental, I would say. So things like an auto loan or a mortgage, yes, they can be the source of financial stress, but really where we saw it were things like student loan debts or credit cards, or even worse forms of debt such as medical or payday loans.
Well, that was all really great to hear. And I will just add, from the America Saves perspective, if you remember in the very beginning, I mentioned that having debt was one of the biggest barriers that indicated by our savers in terms of their ability to save. So I think that is very true. And when we did some focus groups in Wisconsin last February in 21, we heard many people felt like they could handle, a few $100s in an unexpected expense. So, a car repair or something like that. But the bigger expense shocks like medical debt or, a huge home repair, they did not feel prepared for. So I think this all kind of aligns together, that debt really does have a major impact on people's ability to save. And I think that also aligns when you were talking about large, being able to save large amounts, that's why at America Saves, it's so important for us to emphasize just even saving a small amount to get them in the habit. So yeah, it may take a while to build some savings, but starting that habit is really just so critical. So let's move on to our second question. And that is, what are the barriers for employers with offering a program? So what is it that prevents employers from offering, some type of workplace savings programs? What are the hurdles? And Kia, do you want to share from our perspective?
Yeah, so America Saves has heard from many employers that staff time and resources are often the biggest hurdles to implementing any type of workplace savings programs, particularly in the human resources department. They have a lot on their plates already, and then COVID created even more issues to manage, such as remote work policies, COVID protocols, et cetera. So we hear from employers that even with these barriers, they want to offer something. And so the question becomes like, what are those barriers? And then what's the best way for them to be able to offer something, even if it's not the full program that they want, but just a foundation of places to start.
So we had at Pew, we had done some research a few years ago on small businesses, and because that's where you really find the lack of retirement plan coverage is in sort of the small business. And there's lots of definitional issues about what is a small business. I think we generally looked at it as under 100 employees, but I've seen different ones. But in that survey, we asked a lot of questions about what were the barriers to offering retirement plans. And the top two answers came back as the cost of starting a retirement plan, and then also the administrative capacity of the business owner. Business owners wear a lot of hats, at the small firm level. And so the sense that they'd have a lot to do. We did not ask the question of what people thought the cost of starting a plan was. And, then, is that a realistic barrier, or is that just more perception? I think that's sort of an interesting question there. Coming in third in that survey was a perceived lack of demand from employees. That was kind of distant third. And just to cap it off, I know others have their hands raised, but we also found that firms don't typically offer retirement plans right away. They tend to offer things of more immediate need, like health insurance. But at some point, when the firm reaches some zone of financial stability, they've grown a little bit, they've hired, then they're much more likely to offer a retirement plan. But then at some point it tends to plateau, and that may be because they're in an industry that doesn't really offer retirement plans. So there's a lot of different factors at play. That's both sort of the internal financial situation as well as the competitive market in which they're in. I'll stop there.
Great, thanks, John. Matt, Cameron with Notarize.
Thanks, Carolyn. So I think from my experience, and we are a relatively quickly growing fintech startup, Notarize is. And so my experience with launching this program, It was more about explaining the level of effort involved and how much it would take. I agree with Kia that what the biggest obstacle that I found was talking with our human resources team, who was already constrained trying to hire as much as they can, and that this was an added program that they would take on. But we are uniquely structured in that we have a policy team, which I have. And so our policy team actually took on this effort for the benefit of employees, which I thought gave that added resource and eliminated some of the worry about level of effort or burden that human resources might have. And then also, Carolyn, I have to give you a shout out, is we worked really closely with you, and without your help, I don't think we would have launched this program or been successful. And having America Saves backing for giving us that expert advice really brought our CEO on board. And then once we had that, the program was smooth sailing.
Well, thank you for that. It was a pleasure working with you, and to see all that Notarize was able to accomplish. It was really great. Let's see, Dave Mansell with Wisconsin Department of Financial Institutions.
Thank you, Carolyn, and it's great to see everyone and hear your perspectives. There's so much here to unpack, so I won't try to dominate the microphone, but we did a couple of initiatives in Wisconsin, the public employees, and we're representing counties, cities, state government agencies, universities, firefighters, all the people that fall under that category of public employees. And one initiative was funded by the National Association of State Treasurers. We got a grant and did a year-long program that provided a financial, personal finance education center. And so by having that there and bringing in tools for that program, I think it did translate. The big barrier was staff time. Will employers allow staff time? In a lot of cases they did. And then marketing, you've got to be able to have some staff internally constantly being the dripping faucet of attention saying, you should do this, you should do this. And then buy-in from the upper echelons and leadership. If you don't have that, things just fall flat. So working on those pieces, we were able to manage a program where we had over 18,000 people participate. And there was a translation with financial well-being and people, like I think we had 21% started or added money to an emergency savings program just by having a financial literacy piece. Say you should be thinking about these things. Here are some things you can do. We added a tool called Savvy. It's a fintech, social entrepreneurship type repayment tool for student debt, which is a big deal right now. So a lot of people signed up for that so they could more efficiently pay back their student loans, and in some cases might even be forgiven. So that's a tremendous way to save money if you don't have to spend money. And then we were working on a pilot with Carolyn for what we call Wisconsin Saves, and maybe Carolyn, you'll mention more about that, but it was an initiative just by having the staff time of Carolyn's together, we were able to basically, one thing that government can do is call meetings, and people will come to the meetings, and we had leadership there to talk about how we can get more employers to communicate to their employees that they should start an emergency savings through direct deposit. And again, it's that megaphone of trying to get that message out and being on the front burner, making this issue a front burner issue. That takes a lot of energy and a lot of marketing and a lot of email, networks upon networks. But if we can keep that moving, we had over 100 employers sign up. And Carolyn's going to be finishing some research on that by the end of the summer. So more to come on that topic. Thank you.
Thanks, Dave. Yeah, and I'll share a little bit more about Wisconsin Saves at the end, but I want others to have a chance to talk. So Jerry Quinn with AFMA, I think you had your hand raised.
Yeah, thanks, Carolyn. Can you hear me okay? I'm testing out a new headphone here.
Yep, we can hear you.
Okay, great. Yeah, you know what we've done is we've really taken hold of using education to our team members as a method of gaining buy-in. As soon as we began a regular cadence of savings and 401k training, we saw a marked improvement in 401k participation. And we highlighted the mantra of "this is free money, folks, you're leaving it on the table." It seemed to resonate. And then within a year or so's time, we surveyed the team members at large, whether they were participating or not, and asked them what they wanted to see more of. And since that time, we've been encouraged to offer some Roth IRA options within our 401k. So these are employees now that are looking at, what do I do with after-tax dollars that I can save away? And the way we were able to do that, the thing that encouraged us, we're a relatively small company. We have, I'm not sure who all has number of employees, but I have 200 employees across 3 business enterprises. And sometimes we feel like a very small company. Other times we feel like a rather large company. But as a relatively small company, if you will, we were able to work with our 401k provider, a known financial institution out there, and they were able to just plug it in for us. So it didn't tap into the time constraints. I do want to learn more about some of these savings options that you all are providing to your employees, and maybe that's in some feedback we'll get after this meeting. But we have not gone to that level because of the HR bandwidth constraint. So we've got a small HR team that holds all of our team members together, and asking them to do more with the same resources is hard to do. So that's my contribution, and just thought I'd share that. Thanks.
Great, thank you, Jerry. Blake Allison with LifeSense, I think you had your hand raised.
Yes, hi everybody. Very much a pleasure to be here, and thanks for hosting the roundtable. Just building on a lot of the existing comments, what we have seen as a perspective, we are a provider of an online financial health and wellness program that we bring to employers and other organizations from a financial wellness program perspective. And I think there are a couple trends. Obviously, bandwidth is an issue, and a lot of the things have already been discussed. But I think that also we're seeing that the marketplace of financial wellness offerings, the different types of financial wellness programs have proliferated in the past number of years. And so where does savings fall in that priority, right? So there's so many different types of financial wellness programs and vendors and providers that I think it's very hard for HR teams and other other people in companies evaluating what to bring in, what types of services to offer the employees. There are just so many things that have to be evaluated. If you bring in a short-term savings program, how does that impact? What's the opportunity cost of doing that? So I think that's something that we have seen, and we've helped companies navigate as best as we can. But it's really it's just, I think the proliferation of the marketplace is significant. And then also building on a comment I think John made about not knowing that there's demand. I think one of the things is we always find it super important to start with some type of evaluation or assessment of the employees to understand where they are, what they need. And we have a really cool case study that shows that one of our clients, 20,000 employees, really didn't feel like they needed a financial wellness program because all their employees were well paid and they had great benefits. And we're like, okay, well, let's just humor us. Let us do offer a financial health assessment. And it came back that 88% of those employees were stressed or extremely stressed about their personal financial situation, and about 62% felt like they were living paycheck to paycheck. And so without that information, it's very hard for employers don't have that data to go back and say, look, we really need to offer this kind of program. So I think that visibility and transparency is always helpful. So thank you.
Great, thank you, Blake. And I will echo what you said about thinking that your employees are financially well. That's often a misconception with banks and credit unions. People assume that because they work at a bank or credit union, they know what to do and they're already doing it. And in our work with banks and credit unions around America Saves Week, and even in Wisconsin, that's not always the case. And so I think you're absolutely right that taking that pulse of your employees is a critical first step. So Jeannie Thompson, you want to chime in?
Sure. I just had one thought that wasn't brought up previously, but I think sometimes the barrier for employers is the fear of litigation and that fiduciary responsibility over, fees and their employees' well-being, and especially when there's a lot in the press about, lawsuits and things like that.
Well, thank you for sharing that. And then Mark West with Gusto.
Hi, thanks for having me here. For those of you that don't know Gusto, we are a payroll and benefits platform. And as part of that platform, we enable some financial wellness tools, including a short-term kind of savings product that we call our savings goals. One of the things that we see, in terms of employers, sort of wanting to adopt these programs for their employees is what a lot of folks here have talked about, which is number one, education around why this is important for employees, for their employees, and building kind of their financial resilience to reduce overall kind of financial stress. I think that's really critical. And then number two, what was mentioned earlier, sort of the bandwidth constraints for a small business employer. So Gusto focuses a lot on small businesses. So we're talking about companies that have, between 1 and 100 kind of employees in general. And so for a business owner that is running their business, doing all of the other, kind of HR things, in addition to, kind of thinking about their employee financial wellness, it's really overwhelming. And so I think that there's a place for other providers out there like Gusto, other payroll providers out there to provide the tools, services, marketing, and education for both employers and employees to help kind of increase engagement. So some of the things that we've seen in the offerings that we have.
Great. Thank you, Mark, for sharing that. And just to circle back to what Dave Mansell mentioned, just to give you a brief summary, in Wisconsin, we have been working with a leadership group there, public and private mix, to share resources with small to medium-sized employers, so those up to 2,500 employees, all with the design of helping them to educate and motivate their employees to save automatically through split deposit. And we designated that size of employer because of what many of you said, that they don't have the bandwidth or the resources to focus on much else other than their core business. And so that's what we've been working on since April of 21. And we've been learning a lot. And right now we're in a focused effort in the Milwaukee area. So there is more to come on that later this year from the results of all of this pilot project. So with that, let's go on to our third question, which is looking at the barriers for employees to participate. So what kind of feedback or insights have you all heard in terms of when employers are offering programs? Is there a lot of participation, a lack of participation? Why? Is there a reluctance on the part of an employee to let an employer know that they need financial help? Are there too many services being offered? They don't know what to figure out, what to choose from. They're confused where to go and how to access the services. And so then, Kia, do you want to share the America Saves perspective?
Yeah, so one of the new projects that we piloted back in April is that we actually created a private online workshop for employees of Even as an early wage access fintech platform. And that particular workshop was walking them through a spending and savings plan. So how to create their own spending and savings plan. And it was very tactical. We looked at their income, we looked at their debts and expenses. We walked them through what to do with that information once they have it. And they walked away with essentially their own budget and feeling good about that. We had about 3,500 people register for the event. Most of these were Walmart employees, some from a few other places. And one of the things that we noticed in particular was that we had a lot of people register. Not as many showed up live. So we offered 2 different workshops at 2 different times of day. So we had a midday one, and we also had an evening one. And we did see them tune into like the replays. So, but one of the things that stood out to us is that we expected more for the live events, even with us having those two different options, so that we'd have higher take up. So that's just one of the kind of barriers that we're seeing, offering information and still having low live turn up. Something to think about with your employees when it comes to offering these types of services. So just wanted to give that input from the America Save side.
Great, thanks, Kia. And so for this one, I'm going to start with David John.
And that requires me to unmute, actually, which is an interesting technical question sometimes. We actually did a national survey which allowed us to trade off some of the concerns that consumers had about various employer-based savings opportunities. One of the things that we found was that there was a very strong concern about privacy. They definitely did not want employers to know when or how they used a savings program, or if they needed assistance or things along that line. Second, people wanted immediate access to funds as opposed to 3-day delay or anything along that line. So that was another concern. There was a concern about whether or not the account would be able to go with them. They were very concerned that if it was an employer-based account, that when they left, they would lose access to their money. Last but not least, it turned out that there is a serious problem, as I mentioned before, with the enrollment method. We have seen other studies that show even when people make a decision to do certain savings changes or the like, the likelihood that they're actually going to do that declines almost with every minute that passes. So just because somebody makes a decision that I'm going to do this doesn't mean that they're actually going to do it. So an immediacy of signing option is also.
Great, thanks, David. And then I'm going to call on Doug Ferry with TrueConnect.
Hi, thanks, Carolyn. And you always do such a great job with these. So thanks for inviting me to it. We have an employee benefit platform, financial wellness platform called TrueConnect that does include employee savings, emergency savings as a feature. And one of the things that we found and have found consistently is that not every employee is ready temperamentally, emotionally, psychologically to even think about savings, let alone actually implement it. They live paycheck to paycheck. They have a lifetime of struggling to pay bills and to manage their finances. They don't understand, how that works. And don't feel like they can afford it. And so for all the same reasons why, it's hard for employees to get involved all the time in 401k plans, even though, there's tax advantages, there's employer matches, there's automatic contributions from your paycheck, there's a huge earnings potential. Getting those employees to actually participate is very difficult. So ironically, we have incorporated a loan program in our platform so that those employees who are struggling living paycheck to paycheck and have a financial crisis, even though we're trying to encourage them to develop savings, we give them access to the loan first to pay off that crisis, which kind of relates to what was brought up before about how those employees that are already in debt or struggling with payday loans or student loans or credit card debt have a hard time thinking about savings. We give them access to a loan in order to help pay that off, which is paid through automated payroll deductions over a period of time. And then we make it easy for them at the end to just continue having that payroll deduction coming out of their paycheck after their loan balance is paid off. And we reroute it or rebate it into their emergency savings account so that they can start accumulating savings. So we find that helps create what we call an on-ramp to savings. where somebody who maybe never thought that they could afford to do it in the past has been able to manage the deductions that have come out of their paycheck to pay off their loan and pay off their debt. And so just continuing that payment into savings actually provides an easier access for them.
Thank you very much, Doug, for sharing that. Really appreciate it. And it's been nice working with you on some of those issues. And Matt Ball, you had your hand up as well.
Yeah, I would certainly echo everything that Doug and David John, and I'm sure others will contribute. But I think it's also important to recognize that one of the real barriers here to sort of understanding engagement is the lack of consistent understanding of the needs of the workforce. And so I often hear from employers that we've only got 10% engagement with X program. And my first question to them is, well, how many people need that program? And to me, 10% engagement with the 10% of your population that needs a solution is a really successful program. And so I would go back to some of Blake's comments earlier around that need for baseline assessment to provide a more accurate view of whether the solutions are actually meeting the needs. I also think that one of the things we've continued to see, and in some ways the pandemic has accelerated this trend, we saw it first manifest in the direct-to-consumer space, which is the increasing comfort level of the US population, regardless of income level, regardless of demographic, using mobile architecture in which to conduct their financial business. And so some of the things that we've recently seen through our research and studies is that we continue to see fintech in particular be an effective way to reach those who are less inclined to engage in person or in other mechanisms through an employer. And so one of the things I think is also a barrier is employers too often structure their programs around what they think are the best paths for engagement, as opposed to really putting the employee at the center and understanding how the employee engages with those. So for example, one of the challenges we continually see is when folks have a financial challenge, they often don't think about it the way that like an internal benefits page is structured. So they think of it in terms of how it impacts their material lives, and the disconnect they see when they go into an employer's workplace to try to find a solution. The second that fails, you've lost that employee, and trying to regain them just increases the engagement hurdle. So the capstone there is thinking for employers. It's actually, how do you think about how employees view the solutions? How do they engage in their daily lives? And structuring the solutions in a way that reach them in more nimble ways, including inside and outside of the workplace channel, because not everyone's going to be comfortable going into an employer setting, sitting down for a meeting and trying to engage that. So fintech, baseline understandings, and centering the employee experience more central to the design of financial wellness programs.
Great. Thank you very much, Matt, for sharing those. Those were great insights. Wendy Kennedy with Kroger.
Yes, thank you. So for us, being a large employer, where we struggle with barriers with employees is based on internal surveys is one, not understanding what benefits we have and how they can be utilized. Communication, we have, associates across the country. And so that communication is not always getting down to the appropriate level. And thirdly, I would say is just like the consistent method of delivery is not always the same. So that's a big struggle for us in determining, what is the best way to communicate to our associates. Lastly, time. Associates say they just don't have time to sit down and go through and determine, what benefits are beneficial to them. So, we're working to, make communications like more bite-sized and readily available to our associates that they can go out on their own and take 5-10 minutes and listen to a expert about ACO Financial or Merrill Lynch and how saving in their 401k is beneficial to them. I think another area we struggle in is we have a large population of union associates. So to them, their main benefit is a pension through the union, and getting them to understand that, the pension is not going to carry them through the retirement, and it is important for them to continue to save on their own through their 401k and other methods. So for us, I think that's where we struggle the most with our associates.
Great. Thank you, Wendy, for sharing that. Brian Gilmore with Commonwealth, I think you had your hand up.
Thanks, Carolyn. So I think my response maybe connects the barriers that employees face, and I think some barriers we've seen employers experience, not in terms of offering the program, but how it gets offered. And I think some of that comes down to, especially for larger employers, the systems that they have to communicate about these benefits, to do things that folks have talked about, like active choice or choice architecture, to simplify the onboarding process to some of these accounts. I think it's a mix of some real and perceived regulatory barriers, but also just system limitations on what an onboarding system can do, or what a payroll split deposit system can do, or the open enrollments system, which we think of as all opportunities to simplify that experience as an employee of learning about a benefit, understanding how it can be helpful to you, and making it really easy to sign up for it, start that savings account, and have automatic savings. But in the reality, implementing those, the steps often become numerous for the employee. And so all of those challenges about finding time to understand the benefit, take the steps, open the account, set up the automatic savings. I think to David John's point earlier, that is drop off from intention to action in really significant ways. And some of those are legitimate just systems challenges, where we will have maybe a creative idea about how to implement an active choice intervention, bring that to our contact at the employer, who is excited to do that, but then has to go to the benefit administration providers to propose that. And it's not feasible, not technically possible. And so I think those are real limitations on kind of putting the best program together for employers and employees, especially in some of those larger contexts.
Great, thank you, Brian. And then our last comment on this question before we move on, Blake Allison.
Very, very quickly. I agree with everything that's been said. I think that this idea, keeping in mind that we are not our customers, meaning that we're very passionate and excited about this topic, and people we're trying to reach may not be as much so, but that to me comes back to the user experience. So the flip side of the coin of what I commented on earlier is the employer is not aware of the needs of the employee, but the employees also sometimes are not aware of their own needs. That's one. But two, now, if I'm aware that I have availability to all of these benefits, including a savings program, what is my user experience to navigate across these, especially if they're being provided by different providers? And so how do you create an integrated, seamless user experience where there's not multiple opportunities for drop-off or opportunities, friction built into the system? So I think thinking about the holistic user experience of the employee and how to navigate all the benefits available to them, not just any particular one, is I think something that we have learned and through working with our clients. So thank you.
Great, thank you, Blake. And I'm just going to read a note that John Scott posted in the chat in case you all didn't see it. But his comment was, culture also matters, as some households of color view financial security and retirement savings in a more household or extended family lens, so they may prioritize helping extended family more than saving for their own retirement. Okay, and so with that, we have 2 questions left, so hopefully we can get through these in the next 15 minutes or so before we wrap up. So the next question that we had is, what kinds of support and resources do you or employers need in order to be successful? And what do you think would motivate employers to implement a program? And we've probably talked a little bit about some of this already, but let's just take a few minutes maybe to talk some more about design and how to create a program that's going to work for employees. I mean, I think we've talked about the surveys and things of that nature, but what else around this area in terms of resources and support that would help incentivize employers to take that step? And so Kia, I'm going to cue you up to provide some comments.
Yeah, so we know that with the Split to Save program, we've gotten a lot of feedback on what employers need. And the first and foremost, it needs to be easy to set up and able to integrate into existing structures. So when there is something that they could easily incorporate into what they're already doing, that is extremely helpful. And they want it to be somewhat self-sustaining. So in Wisconsin, the pilot program that we've talked about since we've been here with the Auto Saves Initiative, small to medium employers around engaging small to medium employers around promoting split deposit, we found that even though we offer a toolkit with nearly a dozen items in that toolkit, there were 3 that were most frequently used. So some of the feedback that we're starting to see is to focus on quality over quantity. So fewer, better choices is the best way to go, or is it the best way to go? We're still exploring that, but interested to hear your feedback and what you're seeing or what you know for yourself that you need to be successful.
Great, thanks, Kia. Sid, do you want to start us off?
Sure. Thanks, Carolyn. So I'll be speaking from the perspective of a vendor in this space. So I lead Sunny Day Fund. We work with employers to deliver workplace emergency savings and more broadly liquid savings as a benefit. And where we have seen our program be most successful is when the benefit broker and benefit consultant is a true partner in delivering. I'm sure that the folks that are here on the HR space already know this, but at the end of the day, the benefit consultants, benefit brokers are essentially, contracted capacity, right, with a view to all of the different benefits that are being offered. And when we're talking about presentations, talking about opportunities for us to elevate programs like these, making sure that to Brian's point and Matt's point from earlier about choice architecture, making sure that a choice about participating in a program like this is coming in at the same time that they're choosing healthcare, or is systematically delivered in the same way as they're getting that. Those types of things are really helpful. The other 2 things that we've seen really work well is, in our case, we only work with employers that reward their employees' savings behavior. And we made that as a choice because in all of our research prior, that is something that moved the needle substantially, not just in getting people to save in the first place, but also maintain a level of savings so they're not spending their savings ad hoc. So that's been a really interesting closed loop. And the third piece is, and I think this is something around the policy side, and I think Jean made a comment about this, just clarifying from a policy perspective that a program like this is not just something that is doable legally, but more than that, it's important to do. It's, in some cases, I would argue even more important than retirement savings, but I'm sure David will come after me if I say that out loud. So I think that just making sure that the policy elements are going to be moving to make sure that there's a legal infrastructure around emergency and more broadly liquid savings as an employee benefit would be great as well.
Thank you very much, Sid, for those comments. And then Matt, Cameron?
Yeah, I mean, I agree with everything Sid was saying, but from a more practical, direct implementation standpoint on my end, I don't know if this is something that already exists or not, but if there is a kind of a project management guide that kind of says, here are the three or four steps to get the program first socialized internally within your company. And then the next step is how to kind of implement it in very basic step-by-step guide. I think that would be a huge benefit, and you could give that out to different folks who are being advocates for America Saves and trying to build these programs within their companies. I think a tool like that could go a long way.
Thank you, Matt. I appreciate that insight very much. Anyone else want to jump in on this question? Oh, looks like John Scott.
Yeah, just real quick. I mean, in our survey of small business owners, we did ask what their knowledge level was about the different kinds of retirement plans, and found that knowledge level was very low, except for maybe the 401k. Quite a few people had heard about the 401k, but they had not heard about SEPs or the alphabet soup of different types of retirement plans that are available. particularly for small business. And so I think even before you get to sort of that, how do you get this done that Matt was talking about, addressing some of those knowledge gaps, because choosing the right program could have a big impact as well.
Great, thank you very much, John. And then Brian Gilmore.
Yeah, one other thought that came to my mind, I feel like Carolyn and America Saves, you were called out positively numerous times for being a helpful resource on this call. I think that's been our experience as well, directly working with employers that having a nonprofit or some other expert add additional capacity. And so I think as we recognize that the HR capacity limitations are probably not going to go away and employers are going to look for that support, I think a toolkit is a great idea, but supplemented with that at hand support to try to implement some of these programs, to potentially provide that education, to provide content for emails or on open enrollment or onboarding platforms, et cetera. That's been a lot of the role that we've played in our partnerships. And so from a philanthropic standpoint, continuing to have those resources to be able to do that work, but also I think some of the benefit providers realizing that that's a core aspect of emergency savings. So even our collaborations with some of the record keepers, they've stepped up and said, we can help build this into existing financial wellness content that we have and we offer. So just knowing that additional kind of staff time and resources temporarily to get these programs up and running is critical.
You're absolutely right, Brian. And that's what we have seen in Wisconsin. As Kia said, we gave them a toolkit with like a dozen resources, and they've focused on 3, some pre-written email and website copy, a flyer about saving automatically, and then a link to the Split to Save pledge. And those were the 3 that were picked up the most consistently. So I think you're absolutely right. Okay, so let's go on to the last question and see if we can talk about this a little bit more before we wrap up. So what is a reasonable ROI for financial wellness and workplace savings programs? And we've touched on this a little bit, but what are the expectations and that for these benefits in terms of how they differ from the expectations of other benefits? Are we setting the bar too high? Is it still worthwhile to offer these programs if it's impacting just a small group of employees? And we've had some comments around this already. But Kia, do you want to share a little bit from America Save's side?
Yeah, my background is marketing and communication. So I hear ROI and I get really excited. And one of the things that always stands out to me is numbers are numbers, but they don't always tell the story. And so or the full story. And so sometimes if you're only focused on how high or how small that number is in order to deem a program or a campaign or anything as successful or not, you're missing a lot, especially when it comes to the fact that we're dealing with actual human beings who have their own lived experiences. And so, we have to think broader than just the numbers when it comes to ROI, especially with something as important as financial wellness and workplace savings programs. So an example of that is at America Saves, we don't collect any financial information from our savers at all. Obviously, we're a consumer advocacy program. And so we are very protective of data and personal privacy. And so we have to be very creative when it comes to our ROI. When I'm having conversations with our stakeholders, that's one of the questions that I'm getting, like, how are you measuring ROI? And so while we don't have the actual answers for this, this is one that we're really excited to explore, to hear from you guys when it comes to measuring ROI, with particular focus on outside of those very flat numbers that don't tell the full story. So with that, welcome any different insights that you guys have.
Great, thanks, Kia. And I think Amy Conrad, you wanted to jump in. So why don't we start with you?
Yes, thanks so much. I'll be brief. I'm Amy Conrad from the National Endowment for Financial Education. So this work that's being discussed is a little adjacent to what we do, but I just wanted to chime in after hearing about, ROI that's not just financial. That really spoke to me. And one of the initiatives that NEPI's been working on the last couple of years is our personal finance ecosystem. So centering around individual financial well-being and all of these factors, both educational, behavioral, policy, advocacy wise, that may impact someone's personal understanding or feeling around their financial well-being. And so one of the things that we use that model for is around helping those who are either designing programs or research to put the right expectations around what their work can reasonably accomplish when it comes to impacting financial well-being. And so I'll just I'll share a link to that model if it's useful for anyone. We have a nice 2-minute video overview if you'd like to get the Cliff Notes version. But I really like the idea that it's personal finance and savings are one portion of overall well-being. So that feels relevant to some of the things that I've heard folks discuss today.
Great, Amy. Thank you very much for sharing that. We appreciate that. Cara Watkins with Aspen Institute, you want to jump in?
Yeah, I'll be brief as well. I just want to echo and support everything that everyone has said so far. And thanks, Carolyn and Kia, for leading this discussion. I would just say when it comes to ROI too, that I think employers are more and more recognizing the layers that recruitment and retention really play, especially in this economy. And also, as we look down the future of the workforce and what, benefits we need for the entire workforce to be successful. And I think, we can go down into some of the small and medium-sized business challenges within that, but I just wanted to highlight that. And then also, I neglected to be quick enough to raise my hand earlier, but just for everyone's consideration radar, we at the Aspen Institute are also looking at how public benefits overlay with some of these private benefits. And I know we're talking on the employer side, but recognizing that a lot of employees utilize both types. So we are building out a kind of scorecard that helps determine how you can utilize both all the types of public benefits and private benefits, and also how we can strengthen both. So that's coming out later this summer, but I did just want to make a plug.
Great, thank you, Cara. It was great to hear from you. So I hate to say this, but we probably only have time for 1 or 2 more comments. So I'm trying to be as fair as possible. So I'm going to go in the order that I've seen the hands raised. And so Matt Ball, I think you've got one last comment.
Sure. So we do a lot of work around what's reasonable ROI, and I think there's been a lot of hyperbole about what the ROI could be. So to your point, Kia, I think it's about getting realistic. So we think about it in terms of 3 buckets. One, there's the direct engagement. So how many people use it? Do they seem to like it? That is a valuable metric just in terms of the HR team. Then there's what's the direct change you're seeing for those that use it? Are you seeing, for example, increased savings rates? What does this mean in terms of the direct value that the participant is actually experiencing? Then you get to where I think a lot of HR leaders are getting pressed, which is what's the value to the business? And this, I think, is a conversation that we have to be realistic about, which is we have to base our understanding in correlation, not causation. I am very skeptical of any solution that says, but for our one solution, this outcome would not flow. I think that is unrealistic given the complexity of humans as well as the complexity of benefits and other factors that are beyond the control of the financial wellness provider. But I also think in doing that, HR leaders need to get sharper about how do you connect that correlation to a key business outcome. So for example, we have a lot of financial services firms that are linking this to their net promoter scores. We're having organizations that are linking this to patient outcomes and appreciation scores in healthcare. So what's a business metric that you can start to tie this data to in a way that's actually useful? I then think you have to add into that the human stories, which are really profound. What we've continued to see is that even with C-suite leaders, many of them are just completely unaware of the challenges, and providing them with the spreadsheet worth of data, while interesting, doesn't actually convey the human dignity and impact that these providers provide. So layering in human-centered stories to amplify the message is another way to continue to reinforce the ROI of those solutions. The last thing I would say is when we talk about ROI, you have to also factor in the amount of time it takes to collect and analyze the data. I think there's oftentimes a conception that we turn a solution on, next month we have an ROI. The reality is you need 12 to 24 months for a solution to mature before you see any meaningful data. And that also then requires understanding how do you track changes longitudinally and not just provide snapshots in time, but how do you follow, Doug Ferry from start to end in order to show how Doug's financial health has changed and how his savings behavior has been impacted. So that's what I would say.
Well, thank you, Matt, very much for those comments. And we are going to have to stop there because we have a few last minute announcements to make and some wrap up. So I really, really thank you all for such an engaging and insightful discussion. And I know there were a few of you that had raised your hands on some of these questions and we didn't get to you. And so I thank you for your understanding as we really wanted to get through all of the questions. And we really delved into a whole array of issues and really appreciate all of the sharing of your firsthand experiences, your opinions, research findings. I learned an awful lot today about what is happening in the workplace and where we still have work to do. And so with that, I'm going to turn it back over to Kia for an announcement from America Saves.
Yeah, thank you, Carolyn. I just want to echo those sentiments that this has been super enlightening for us. And for those of you who had something to share and weren't able to, feel free to email me directly or Carolyn, or you can use info@americasaves.org. We'll get that information. Like we said earlier, this isn't our last roundtable, and we still welcome your thoughts and ideas, even though we're running out of time. But Carolyn mentioned an announcement. So today, America Saves is excited to announce the launch of the new America Saves at Work program. This program will be an expansion of Split to Save, the Split to Save program we started in 2018, and also our America Saves for Young Workers program that was started in 2015. The mission of America Saves at Work program is to elevate the importance and positive impact of workplace financial wellness benefits through research, collaboration, and creation of resources. And the vision is for all employees to have easy access to financial information, tools, and resources through their workplace. Here's what the program's components will be. At the core, America Saves at Work will bring the saver voice to the table with a focus on the emotional dynamics at play when it comes to savings. As an organization, we're committed to creating content that ensures employees know that their obstacles, no matter their demographic, their race, and their own lived experiences, are being considered, they're being voiced, and being addressed with the resources that we provide. In addition, we'll have a menu of targeted resources that will be created for employers, including Split to Save. So Split to Save is staying. We'll have employee surveys and co-brandable workshops. And we'll have a subset of America Saves resources that are designed to support the needs of employees. And we've heard a lot today about that, that technical assistance that America Saves. So not just giving you resources, but we're also here as an organization to support you as you implement and continue to share with your employees. So that technical assistance and ongoing support for those who utilize and implement our resources into their financial wellness programs will be a huge part of America Saves at Work. We'll have special events such as this roundtable for employers, but we'll also have events for employees. And then our research project. So currently America Saves has a huge research project underway called Foundation 1000. And with that, we'll have data sets, results, and insights that will inform workplace savings. In particular for Foundation 1000, in this study, we are working with MIT's Poverty Action Lab, and we're exploring what effect lump sum payments versus installment disbursements have on average savings balances and perceived financial stress. We are but we'll be working with low wage earning hourly workers. They'll receive $1,000 cash injections as part of this research project. We have another research project on the table that has to do with tax refunds that we'll be announcing probably shortly. And the other component is collaborative projects and opportunities. An example of that is the workshop that we did with Even for their employees with creating their budget. So here is how we are inviting you to be a part of America Saves at Work. As a part of the program, we're forming a coalition to help increase the number of employers offering financial wellness programs, expand and improve the components of these programs, and help increase the level of employee participation. So if you are in and you're ready, you can join the coalition. We're going to drop the link to join the coalition into the chat. But one quick note, this isn't, we've mentioned before, our last roundtable or listening session. As you sign up for the coalition, you can choose to appoint a different point of contact to stay informed about the program. However, for special invite-only events such as this one, we'd like to stay engaged with you as leaders and pioneers in the workplace savings arena. And another thing to note is that more than one person within your organization can be assigned the POC for the America Saves at Work program. So if you'd like to stay abreast of communications along with a different point of contact, feel free to send them that link to sign up for the coalition. We welcome practical tools and resources designed for employers to share with their employees to be included in our resource center for America Saves at Work. And this is a project that's going to roll out over several months, that resource center. So this is something you can think about and get back to us. But we will be hosting more events like this one, are open to your suggestions for topics, including concrete ways we can work together in the shared mission of improving employee financial well-being. We also want to provide space for employers to network and share experiences, learnings, and to benefit other employers. So if there are other organizations you think should be at this table, please let us know by reaching out to us at info@americasaves.org. We will send more information to you following today's event with a link to the America Saves at Work program, where and how to submit resources, and how to submit topics for future roundtable events.
Thank you, Kia, for all that information. And if you can't tell, we're very excited about our new America Saves at Work program and all of the opportunities that it presents us to continue to work together as a community devoted to this topic. So again, we thank you for your taking time out of your busy schedules to join us for this inaugural event. We appreciate all of the information and insights that were shared today, and we really look forward to more opportunities in the future to come together in our shared mission of building a financially healthy workforce. And so with that, I'm going to say thank you and have a great rest of the day. And as Kia said, feel free to reach out to us at info@americasaves.org with any final comments, questions that you would like to add to this conversation, and for any other information about America Saves at Work. And we look forward to being in touch with you.